Students, so we are going to do questions today. So let's open our book. So these are our questions. The first of them says X and Y are partners in a firm. They do not have any partnership deed. What should be done in the following cases? The first case says X has invested 10 lakh rupees and Y only 5 lakh rupees as capital. X wants interest on the capital at 8% per annum. So we have to say what will be done in the following cases. So since it says X has invested some money, Y has invested some money, but there's nothing mentioned in the partnership deed about providing interest on the capital. Therefore, no interest on capital will be given. The second one is X spends twice the time that Y devotes to the business. He wants a salary of 10,000 per month for the extra time spent by him. Again, it is not mentioned in the partnership deed, so therefore it will not be given. Next is X wants to introduce his son Rajesh into the business for 25% share to be given out of his share of profits, and Y objects to it. So his son is supposed to be coming into the business for 25% share, and Y objects for it. Yes, so one partner is wanting another partner to come, and the third partner is saying that I do not want it. So this partner will not come because even if one partner objects, the new partner will not be admitted. Next is X has advanced a loan of 2 lakh to the firm. So a partner is given a loan to the firm. He claims interest at 9% per annum. So he will not get it at 9% per annum because by default, if interest has to be given on the loan of a partner to the firm, then it has to be given at 6% per annum. The last is Y withdraws 10,000 per month from the firm for his personal use, and X claims that interest on drawings at 12% per annum be charged from Y. So Y has withdrawn some money, and X is saying that you charge him interest at 12% per annum. So this is again not mentioned in the partnership deed, so it will not be asked from this partner, from Y. Okay. Then let's look at the third question. It says G and S are partners in a firm. The capitals are on April 1st, 23, 5 lakh 60 and 4 lakh 75 respectively. On 1st of August, they decided that the capital should be 5 lakh each. The necessary adjustment in the capitals were made by introducing or withdrawing cash. Interest on capitals is allowed at 6% per annum, and we are required to compute the interest on the capital for the year ended 31st March 2024. So two partners, we have their capitals as 560 and 475. This one. Yeah. So question 3. Two partners, G and S. The capitals, the opening capitals are given as 560 and 475. So G is 560 and S is 475. Now, on 1st of August, they decided that the capital should be 5 lakh each. Which means on 1st of August. This is on 1st of April. The year is 23. Then 1st of August 23, G's capital 5 lakh. And similarly of S also it should be 5 lakh. The necessary adjustment was made by introducing or withdrawing cash. Okay. So if I have to make this 5 lakh, it was earlier 560. This was earlier 475 and it is becoming 5 lakh. So here what is happening? I am removing cash. So first of all, if I say I have to calculate interest on capital, we know we calculate it in a very simple method on the basis of how much it is for a particular stretch of time. So interest on capital. This is for G. First we will say on 560, we are charging 6%. So 6 upon 100 for how long? From 1st of, this is April to 1st of August. So April, May, June, July. That is 4 months. So that makes it to 4 on 12. This is my first part. And my second part is on the remaining. So that is 5 lakh into, this will be 6 upon 100 into, now the time period from August. So you count August, September, October, November, December, Jan, Feb, March, 6, 7, 8. I think it's 8 upon 12. Let's see what this comes out as. Let's open up our calculator. So 560 into 6 4s are 24 divided by 1200 gives us 11,200 plus 5 lakh into 6 8s are 48 divided by 1200 gives us 20,000. So this answer comes as 31,200. Let's see what our answer is in the book. So interest on capital of Girish is 31,200. That's correct. So this is correct. Next, the next part is interest on capital. This is of the other guy. So that is S. So for him, again, he has 475. So 475 into 6 upon 100 into 4 upon 12 plus, after that it becomes 5 lakh. 6 upon 100 into 8 upon 12. So this comes out as 475 into 6 4s are 24. Divide this by 1200 gives us 9500 plus 5 lakh into 6 8s are 48 divided by 2400. Not 24, 1200 gives us 20,000. So when we total this, 29,500. Let's see if our answer is correct. It's correct. So it is 29,500. Okay, let's go to our next question. Fluctuating capital. So we have got questions on this. Let's see. On 1st April 23, A and B commenced business with capitals of 6 lakh and 2 lakh respectively. On 31st March, the net profit before taking into account the provisions of the deed. Okay, was 2 lakh 40. Interest on capitals is to be allowed at 6% per annum. B is entitled to a salary of 60,000 per annum. The drawings of partners A and B were 60 and 40. K. The interest on the drawings for A being 2,000 and for B being 1,000. Assuming that A and B are equal partners, prepare P&L appropriation and the partners' capital accounts as at 31st March 24. So we have to make both P&L appropriation and the partners' capital accounts. So this is the fourth one. We'll try and do it side by side. Let's see if we can. So the first thing which we are told is that there was a profit. I saw the profit mentioned. So it says on 31st March 24, the net profit before taking into account the provisions of the deed was 240. So that means the first item, my net profit, this will be 240. After that, what are the provisions of the deed? Since this is a P&L appropriation, we will write interest on drawings. Interest on drawings is given to us. It is saying 2,000 and 1,000. So by interest on drawings, there were two partners, A and B. So A's interest on drawings is 2,000 and B's is 1,000. Total is 3. Now come to the debit side. So here 2. The first thing that we will write in this is interest on capitals to be allowed at 6% per annum. So 6% per annum. Interest on capital A and B. So for A, it's going to be 6% on 6 lakhs. So 6 6 are 36. Therefore, it's 36,000. And for B is 12,000. So 36 and 12. This comes out as 48. Next is I saw a salary. Who were we supposed to give it to? B is entitled to a salary of 60,000 per annum. So B, 60,000. Next, drawings of the partners. Okay, this will come in the capital account. So now let's see our balancing figure. Here will it be found? It will be found on the debit side. So to profit transferred to partners. Now let's directly write the name. Okay, it's rubbed off. Transferred to. Let's write A. A gets how much? First of all, let's calculate what's the total balancing figure. So my total balancing figure will be written here. This comes out as 243. Double underline. Here also we'll write 243. Next, what is our balancing figure? 243 minus 60 and 40 is 100. So 108, which is 135. So I will write my balancing figure here. And if I divide this, I have to divide this in the profit sharing ratio. So my profit sharing ratio, they are saying it is they are having an equal partnership. So this will be divided into two. And that will be 135 divided by 2, 67,500. So each of them gets 67,500. All right. So this is our account which we made. Let's make the second account on the side. We will call this partners capital account. Oh, we forgot to put debit and credit. Debit and credit. Now we have two partners. So let's make it in that way. Particulars. Then you have A rupees, B rupees. Then again particulars. I think I'll use up some more space on the right side. Otherwise it will be too congested. So let's do it that way. This will be better. Let me shift this slightly. This will be better. Debit, credit. We have particulars. A rupees, B rupees. Particulars. A rupees, B rupees. Now, the first thing that we will write on the credit side are the balances. So here we will write, it says these are the commenced business. So here I'm going to write by bank. So it's like buy cash or bank. So by bank account, I'm going to write the amounts, which is 6 and 2. Next, the partner's capital account, we write things that are going to be given. So we can just see it now. P&L appropriation account, what we have written. So all these items which we have appropriated, we will write here. So let's write it on the, that is 36, 12, and 60. So buy interest on capital. Here we have 36. Here we have 12. And by salary. Who's getting the salary? B. So here you won't have anything. Here you put 60,000. Then we were told drawings also. So drawings were 60 and 40, which we will write on the debit side. So two drawings 60 and 40. To interest on drawings. We are given as 2 and 1. Okay, then anything else? Yes, my profit. So from the format, you must remember that in the partner's capital account, we write my profit and loss appropriation account. This is my profit. So how much did we calculate? 67,500 each. So here in each of them we will write 67,500, 67,500. Now let's get our balancing figure. So on the debit side, I'll write 2. This will be balance carried down. Let's see what is a balancing figure. The side's total is 6 lakh 90. 6 lakh. I put calculate on this. 6 lakh 36 plus 67,500 makes it 7 lakh 3,500. The other one, 2 lakh, 3 lakh 20. 6 twos are 12, no? Let's do it in small numbers. So 2 lakh plus 60 and 60 is 120 plus 7,500 plus 12,000. 339,500. So here I will write 703,500 and 339,500. Double underline to close the account. So I get my balancing figure as 339,500 minus 41, 298,500. That is 298,100 and minus 62. So 703,500 minus 641,500. Let's see if our answers are correct. So 641,500 and 298,500. These are correct. Okay, then what was the other balance? Divisible profits are 135. Okay, so we come to P&L appropriation, which we just made. I will remind you, this is called divisible profits. Okay, so that's our answer again. Let's do another question. Okay. Question 4.B. This says A and K entered into partnership sharing profits and losses in the ratio 2:1. So this is solution 4.B. The earlier was 4.A. So two partners came into partnership. Profit sharing ratio 2:1. Capitals were 90 and 60. The profit during the year was 45,000. According to the partnership deed, both partners are allowed a salary of 700 per month to A and 500 per month to K. Interest was allowed on the capital at 5% per annum. Drawings during the period were 8,500 for A, 5,500 for K. Interest is to be charged at 5% per annum on the drawings. Prepare partners' capital accounts, assuming the capital accounts are fluctuating. Okay, so we have to prepare only the capital accounts. Now, just now we saw a question where we prepared a capital account, but at the same time we also had to prepare its P&L appropriation account. So we will start this question in the same way. We will prepare the P&L appropriation in the working note. So let's leave some space on the top. We'll come down, or we can do it at the side. I think the sideways works better. Fine, we'll work it up sideways. So here we'll call this P&L. We'll write our working note first on the left side. Remember, when you're doing these questions in your exam, you don't start with the working note. The reason is otherwise everything else under that heading will seem to be the working note. So what you do, just in order to avoid that, let's also follow the same way. So here we write our main solution. Here we since have to make a partner's capital account. So let's make a partner's capital account. There was one point saying which kind of an account we were making, assuming that capital accounts are fluctuating. Okay, so we write debit, credit, saying assume it is fluctuating. We have two partners, A and K. So the first point is their balance. So we are told their balances, their capitals were 90 and 60. Profit during the year was 45. So the first item we write will be by balance brought down 90,000 and 60,000. Then the capitals with this, the profit during the year was 45,000. So this goes in the P&L appropriation account. So on the right side, let's make a P&L appropriation also. Could we copy this from the top? No, it'll hardly take any time. So let's make it only way to copy things. And drawing with the blue. Okay. So P&L appropriation. Debit, credit. This is our, as we know, this is our working note. So in our working note, we don't need to put headings. It's just fine because only we know what we're writing in that. So by net profit, the first profit given to us is 45,000. So we write 45,000. Then it says, according to the partnership deed, both are allowed a salary of 700 per month to Anuba, 500 per K. So we are giving salary. So by salary, A K. 700 per month means 12 sevens are 8,400 per year and 500 per month. So 5 into 12 makes it 6,000. My total comes out as 14,400. What else is given? Uh, Interest is allowed on the capital at 5% per annum. So 5% on 90,000 and 5% on 60,000. Oh, we made a mistake. These figures have to come on the debit side. I thought we were making a partner's capital account. So let's cut this, take it. The debit side. We will rub out the prefix, the correct prefix. So it'll be 2 salary. Then another thing, 2 interest on capital. We saw it is 5%. So 5% on 90,000. 10% is 9,000. 5% is 4,500. So A and K, 4,500. And for K, 10% is 6,000 for K. That means 5% will be 3,000. 4, 5, 6, 7,500. This is done. Then drawings during the period were 8,500 for A and 65 for K. So drawings are written in the partner's capital account. So we write it on the debit side. So on the debit side, we will write 2 drawings. Drawings are given as 85 for A and 65 for K. Then it says interest is to be charged at 5% per annum on the drawings. So we, in this case, have been told to calculate. Now we have to do it in this way. We know our drawings. This is for A is 8,500. This means it's 8,500 per annum. That means during the whole year, not per annum. I won't call this per annum. Let's correct it. It means that we have withdrawn 8,500 in the whole year. Now, when nothing is mentioned, then we have to assume that these are done at the middle of every month. So we have 12 months. So this is like 1st of April, then May, June, July, August, September, October, November, December, Jan, Feb, March. So this is 1st of March. And this is 31st. Okay. So when you are told drawings are 8,500, this means that the drawings are regular and it's done at the middle of every month. So my first drawings will be year. Second drawings will be year. Third year, fourth year, fifth year, 6th year, 7th year, 8th year, 9th year, 10th year, 11th year, 12th year. So these are all the times when it is taking place. So when is my first drawings? It is on this particular time frame. When is my last drawings? At this particular time frame. Therefore, how much is my average period? Average period is time left after the first drawings, which is 11.5 plus the time left after the last drawings, which is 0.5. The whole thing divided by 2. So this will come out as 6. Now, when you go on calculation of interest on drawings, interest on drawings equals total drawings. You know my total drawings are 8,500 into the rate we saw 5%. So 5 upon 100 into average period, which is 6 upon 12. So let's do the multiplication. 8,500 into 6 5 are 30 divided by 1200. 212.5. 212.5. So we can take this as 213. Now, where do we write interest on drawings? We write it on the debit side. So 2 interest on drawings amount will be 213. What is it for the other guy? He has done total drawings of 6,000. So now let's do this in white. So drawings of the 6,000, right? 6,500. So therefore interest on drawings is going to be equal to total drawings 6,500 into rate on 100, which is 5 upon 100, into average period again 6 upon 12. So 6,500 into 30. Oh, 6,500 into 30 divided by 1200. It's 162.5. So I can take it as 163. Or let's take this as 162, be a round figure, rounded off figure. So 162 and 213. Here let's write 162. Then what else we have to write? From this, the salary we can write 84 and 6,000. So these partners are getting it. Therefore, on the credit side, I will write by salary. What are the amounts? 84 and 6,000. Next, by interest on capital. This is 4,500 and 3,000. Okay. What else? Anything else is given in this question? Prepare partners' capital accounts. Okay, so let's straight away get a balancing figure in this. We have to show our what you call interest on drawings. So by interest on drawings A and K. We just calculated it, which is 213 and 162. 375. So our total is coming as 45,375. Now on the debit side, what is my balancing figure? 49, not 55, minus 7,500, 23,475, which will be known as to profit transferred. We are maintaining which account? Fluctuating. To A and to B. How much is transferred? We just saw this figure will be 23,475. 45,375. So 23,475 in the ratio 2:1. 23,475 into 2/15650 into 2/3 gives 15650. And the second one can directly subtract it. So 15650 minus 23,475 gives you 7,825. Thus, this is my divisible profit. We saw this is also known as divisible profit. Now this, where are we taking this? We are taking this on the credit side in the capital account. Let's check if these answers are correct. Divisible is 23,476. Divisible is 23,476. So that is correct. This will be correct. Now when we transfer this, let's see what our balance comes in the capital account. So by profit and loss appropriation account, amounts are 15,650 and 7,825. So we will get our balancing figure when we total this. So what are our totals? 15650. Just a minute. So 15650 plus 4,500 plus 8,400 plus 90,000. 118,550. 118,550. The other side, 60 plus 6 plus 3 gives 69. 69,000 plus 7,825. 76,825. Sure. 76,825 minus 6,500 minus 162. 70,163. So we get 70,163. Total is 76,825. 825. Again 118550. So 118550 minus 213 minus 85 109837. 09837. This will be known as to balance carried down. This is my balancing figure. Okay, that is this. These two written here. So let's see our answer 109837, 109837, and 70162. 70163. So 1 rupees difference is coming. That is absolutely fine. So these two come on the debit side as the closing balances. Yeah, so these are our accounts. This is again a part of our working note. So we can call this working note 2 and the other one as working note 1. This is working note 1. Let's go to our next question, which we should give a try of. Okay, so we'll try question number 5. It says X and Y are partners with capitals of 1 lakh and 80,000 respectively on 1st April 22, and their profit sharing ratio is 2:1. Interest on capital is agreed at 12% per annum, and Y is to be allowed an annual salary of 6,000. What are we supposed to make in this P&L appropriation account and capital accounts? Okay, so let's make our, since both are to be made, so we will make this in the main solution. So this is question 5. First, we need to make P&L appropriation. So P&L appropriation account. I'm writing it in short, but you must write it with the full name. Main solution. So write the proper headings, particulars, rupees. Okay, who are these people? X and Y. So X brackets rupees, Y brackets rupees, particulars, X bracket rupees, Y rupees. So we are told there are two partners, capitals are 1 lakh and 80,000. Fine. Profit sharing ratio 2:1. Interest on capital is agreed at 12% per annum. 12% on 1 lakh is what? Oh, this question is saying about manager's commission. So manager's commission is a charge against profit. So this will come in my P&L account. So before we make this or fill up some details here, in our working note, we'll make a P&L account. So again, in rough, this will be, so P&L account by net profit amount is 50,000. Manager is entitled at 10% of the profits. So two managers commission 10% on 50,000 is 5,000. Then I will be left with two net profit. This will be 45,000. Yes. This is simply as profit for the year. So by profit, we will write that as. Then we are closing this account. So 50 on both sides. Thus, in our P&L appropriation, we will write, oh, again, I should instead write this as partner's capital account. Reason is because I made columns for each of these partners. Normally, we don't. Just to avoid confusion, let's call this partner's capital account. And on the credit side, let's write balances. So by balance, brought down. The first line says it, 1,80,000. Then uh, interest and capital is agreed at 12% per annum. So buying interest on capital, 12% on 1 lakh is 12,000. 12% on 80,000, 9,600. Okay, then why is allowed an annual salary of 6,000? So by salary, only to one, so 6,000. Then profit for the year was 50,000. So this profit for the year has given us a balance which we have to put in our P&L appropriation account. So let's make a P&L appropriation account and the main solution also. So again, particulars, rupees, particulars, and rupees. On the credit side, we can write by net profit. Amount will be 45,000. What else we will write on the credit side? By interest on drawings. We are not talking about interest on drawings in this question, so we can forget about it. Let's write those on the debit side. So to interest on capital. What did we write sometime back? 12 and 9,600. So 12 plus 9,600. You can write it with their names. So X is 12,000. Y is 9,600. This total up to 12 and 9 is 21,600. What else were they getting? Someone was getting a salary, right? Why? Amount was 6,000. Okay. Now let's see our P&L appropriation. We are seeing the P&L appropriation. Let's try and get the balancing figure. So I close this account, 45,000. Again, 45,000 to profit transferred to X is capital account and Y is capital account. So to X's capital account, what is the balancing figure? 45,000 minus 27,000. 21 and 5 is 26 plus 127,600. 17,400. Now the 17,400 we have to divide in 2 is to 1. 17,400 into 2 divided by 3. 11,600. So here we have 11,600. And again, what was that amount? I've forgotten. 45,000 minus 27,600. 17,400 is the balance. The 17,400, 1 by 3. Gives you 5,800. Okay. So these are the amounts of profit which we will bring into this other account. So 11,600 and 5,800. Profit. 11,600 and 5,800. Our total is 1,12,000. And this is 123,600. And the other 89,600 plus 6 makes it 95,600 plus 5,800. 101,400. Again, put the values here. 123,600 and the other is 101,400, which becomes your closing balance also. 101,400 and 123,600. So here we will write 2 balance carried down 123,600 and 101,400, which are our answers. So this is how we had to solve question 5. Let's look at question 7. One last one we'll do here. It says A and B are partners in a firm sharing profits and losses in the ratio of 2:3 with capitals of 4 lakh and 8 lakh respectively on 1st April 23. What do we have to make? P&L appropriation account. So in solution, question 7. Solution 7. P&L Appropriation Account. Debit, credit. Okay. Hmm. The question is saying profits and losses are in the ratio 2:3 with capitals of 4 and 8. Each partner is entitled to 10% per annum interest on his capital. B is also entitled to a commission of 10% of net profit before charging any commission. A is entitled to a commission of 8% of the net profit after charging all commissions. Net profit for the year ended 31st March 24 was 480. Straight away, this is talking about commission to the partner. So therefore, it will come in the P&L appropriation account. And interest on capital, we always give it in the P&L appropriation account. So net profit, let's write first. I suppose it's 480. Then, yeah, interest on capital, let's give. So 10% on 4 lakh is 40,000, 10% on 8 lakh is 80,000. So to interest on capital, we have two people, A and B. So A and B. So you have 40 and 80. This gives us 120. Each partner is entitled to 10% interest on his capital. So we given that B is entitled to a commission of 10% of net profit before charging any commission. So to commission of B, 10% on the net profit before charging such commission. So this calculation will be on 480 into 10%. So 10 upon 100 because it is on is to be calculated on the net profit before charging such commission. So 10% of 480 makes it 48,000. After this, it says A is entitled to a commission of 8% of the net profit after charging all commissions. Thus, A's commission, so to commission of A will be on of the net profit after charging all commissions. So 480 minus 48,000 into 10 upon, no, it is 8%, I guess. Hundred and eight. So 480 minus 48, first of all. 432 into 100 into 8 on 108. What was the amount? 432. That makes it 32,000. Thus, what is the question asking us to do? Prepare P&L appropriation account. So I think nothing more is required. So let's wrap up our question. What will we do to wrap it up? On the debit side, we will find out our balancing figure. So we will write to profit transferred to uh, AMB, right? So A's capital account, B's capital account. How much will we transfer? Let's see. So 480. That's my total. 480. What is my balancing figure? 480 minus 32 minus 48 minus 120. No, no, 480, 48 and 32 is 80, right? Minus 120 gives us 280. So I suppose this is 280, the divisible profit. And if I divide this in the ratio of 2:3, so 280 2 divided by, so 112. Okay, so that comes out as 112,000. 280 minus 112, the plus sign, so 168. Okay, so this is our answer, 112 and 168. We can see it here in the answer. Commission to B is 48 and to A is 32. Commission to B is 48, to A is 32. So this is our answer, and we would stop here. Do continue to practice these questions, the basic questions, and like, share, and subscribe to this channel. Till we meet again, all the best.